All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out some exciting stuff here this morning. So let's go out take a look and kind of see where things are, what's going on here with it, and what it means for the challenge. There are no signals for the challenge here this morning, but I'm going to show you what's happening, and we could see by this afternoon, we could see upwards to 7 or 8 signals come in. Now, that could be, but with how things are, there is a possibility that we will see that. Now, if you look at where the market is, and this is a chart of S&P futures pretty much since the Trump drop here, right back, three weeks ago now? And we had these, highs come in, reaction highs, and then we get last Friday with another Trump tweet, dropping things, and then we get this kind of mild push up and sitting. And then last night we get a push back up into these short-term highs. What happened? Well, we saw, a Chinese official came out and talked about China not escalating the trade war when it comes to adding additional tariffs on U.S. goods. Also said that discussions were ongoing about getting trade negotiators together here in September. So that was, as would be expected, that was met with a very positive reaction from futures traders who bought that news up and bought it up relatively aggressively or quickly here. And we saw futures sustain the gain here overnight. And I'm zooming to a minute chart so you can kind of see what it was. It was about a 30-point jump on that news. Futures were down about 10 points, and they managed to really jump. Now, since the market opened this morning, right, we can see there was an initial jump out of the gate. A lot of times that's short covering, and this is a market where the shorts have just been taking the cleaners. They have every reason to get short. They have, they have the macro, they have the earnings, they have, even some short-term technicals, and they continue to get hammered. So we saw some short jumping here early on, and that's very common on a day like today. What also will happen on a day like today, if it turns bullish, what we'll see is some selling come in, and then there'll be an afternoon buy or a late morning buy for most of us where, you get a new high come in, and then the market will just kind of sit up here. And that tends to be a very bullish scenario, but I do not want to rule out reversal risk here today, because if we look at what China said, there's nothing really new in that, right? And yes, it is a positive. Yes, it is something that if there is trade war resolution, this market's seriously undervalued, right, for where bonds are and everything else. If there is trade war resolution, there's a serious undervalue in this market, and one that investors will want to be in, and we'll see money rotate into aggressively. If the trade war continues to escalate, you can make a pretty good argument the market should be about 15% cheaper based on everything else out there. And so it's quite a large dynamic, right? There's a very large difference between, what the stock market would be with a deal and what the stock market would be without a deal. No, I'm not talking about the day a deal happens or anything like that, but just some of the ramifications that would come from a deal. So that's what we have going on this morning. So most things gapping up in a very bullish manner. This is not one of those kind of gaps in the morning that you look at and go, oh, let's just sell it because it gapped up. No, there's a catalyst, right? And I made the comment yesterday that if the market gaps up today and does so, without much news, I'd be looking to short it. but there is a news catalyst. So I'm not looking to short it. I'm not looking to say, well, let's just sell this news and go. It is something where I do have to kind of go, okay, are we seeing some sort of major change come in here this morning? Now, as far as major change goes, one of the things we are seeing this morning, and I'll pull it up on this scan, we are seeing a lot of 3-7 crossovers, and I'll show you the ones just here for the challenge watch list. But just on the challenge watch list alone, there are 19 stocks where the 3-day moving average is crossing above the 7-day moving average. 3 years worth of data, I don't think I've ever seen 19 in one day with this basket. This is a massive number. Now, some of these have no chance of qualifying as a signal, like a Bank of America or a Caterpillar or a Conoco. CSX, no chance. Triple D is off. FCX, no chance. There, JP Morgan, no chance. And SPY, no real chance. But that leaves us with Apple, Baba, Chevron, Facebook, IBM, Intel, MGM, Microsoft, Micron, AT&T, Vulcan Materials, all with 3-7 crossover action on it here today. Now, the consolidation component, it's always tighter in the morning, so we do not see it. I'm triggering here this morning, but it is something where we could easily see some triggers come in here as we get into the afternoon session. But one of the reasons why the triggers are tighter in the morning is because reversal risk is just simply higher. And so if we're going to see a morning entry, that reversal risk component has to be very low. And, the measures that we have in the algorithm for reversal risk are quite high this morning, a little higher than I expected we would see. So you see things like Apple gapping up. They haven't been able to, really track any gains, since the gap up. And if we come in here, wow, market's dropping quite a bit right here. But you can see Microsoft this morning gap up, bought up, getting sold off. So just something that, have to be wary of. If you'll bear with me real quick, I don't have my news feed up, so let me grab it here. I guess the only news feed we really need anymore is U.S. President Trump's Twitter account, huh? It doesn't look like there's anything on his Twitter. And let's see here. Not seeing anything there. I don't have the TV on. So yeah, nothing that I see here, but there's some sort of news. There's some sort of news that happened here with that move, and I'm sure we'll see it here in just a moment. But it is one where I do need to kind of see how these play out with consolidation risk being what it is. That's a monster volume candle here, almost 30,000. And what do we have? About an 8-point swing both ways here. So bear with me one more second. I'm going to go and pull up another one here. All right. Nothing that I see too dramatic here, at least yet. We'll see kind of how that comes in. My apologies there, but anyway, it kind of goes to that. Hey, need to kind of see where things play out here today with some of the reversal risk that is out there, and so while yes, we have a ton of stocks with 3-7 crossovers, a lot of them are in this type of Apple situation or Microsoft situation here, where okay, they've gapped up. And, they're just kind of sitting. And if they gap up and simply sit, what's going to happen to the option values by this afternoon? Yeah, you got it. They're going to come on down, and they will be cheaper pricing here this afternoon. But the list is massive. The list of 3-7 crossovers is absolutely massive, and typically, the bigger the list that we see in terms of number of stocks doing the same thing, the less differential the market really is. And what does that tend to mean? Well, less differentiation tends to mean more of a bearish style market. Now, bearish style markets can have some of the biggest rallies, so it's not necessarily bullish, or excuse me, bearish, but it doesn't lend as well to trend as it does to just pop there with them. So we'll see how the trend components come in here for them. I'd love to be in some trades here and running with some trades, but at the same time, we'll only jump in as as the metrics dictate here. But very different style morning here this morning in terms of that 3-7 action. Not so different in terms of the dynamics that are going on for the entire market here. We have bonds down, market up, right? That's just that's going to continue to be a trend for, I suspect, multiple years. I think that is a dynamic that is returned to the market, and where we see the macro, I suspect it will be a component that remains with the market for a long period of time. Okay. Alrighty. Let's. One other thing I want to go out and look at here with you this morning. I was asked about a stock here, CRWD, and this is a stock that is a recent IPO back in June. I'm not a big IPO guy. I don't know a whole lot about new stocks that come onto the market. Yes, when a Twitter or an Alibaba or a Facebook goes IPO or Beyond Meat, yeah, I pay attention, but I'm not super eager to go out and trade them. Why? Well, couple reasons. The volatility tends to be pretty high. The options tend to be pretty lousy. And I don't really feel like I have any sort of technical basis around it, nor do I have any real fundamental understanding or bias of of the company. Now, occasionally I'll jump in and trade them. I did with Beyond Meat. I've traded that twice here, and just some interesting stuff with it. But if we go take a look at CRWD, I'm not familiar with it in any way, shape, or form. So I can look at the chart, right? And what do I see in the chart? Well, there's some up and there's some down. I don't really see a heck of a whole lot that I'm going to make something of. Now, we've seen this stock go from above 100 now to getting into the lower 80s. So what do I know? I know that it can swing pretty heavily. So what are the option prices going to be? They're going to be pretty lofty, right? They're going to be pretty lofty. Now, when it comes to a stock like this, one of the first things I'll do is just go out and take a look at some of the basic metrics here for it. So if we let's just come into FinViz, we can pull it up, CRWD, and you can see if you change the scale on the chart a little bit, the chart looks a lot different, right? Technical analysis 101. Change the chart, change the patterns, which is, yeah. But here we go. A company with $298 million in sales is losing money. That's common. Negative book value, that's common. Security software and services here. Okay, here we go. They develop security solutions in the U.S., offers Falcon platform. So what do we know? We know this is an industry that is growing, an industry that has some buyout rumors associated here with it, an industry that we see some potential merger action going on as well. So we can skim through here. Their CrowdStrike earnings guidance, tops estimates, and okay, fine. They have earnings upcoming here on the 5th. So after the market closes here on the 5th, now, the market's closed on Monday for Labor Day, so the 5th is a week from now. So there's only a few days. And the question comes in, is this stock going to see a run up ahead of earnings? When it comes to IPOs, that is a common thing to see. It's rather common to see run ups into earnings, but we also see big run downs into earnings that will happen as well. If we take a look at something like Beyond Meat, right? And if we come in, let me find the exact earnings date here. Of when they reported the 29th. But if we come in here to the 29th for Beyond Meat, you can see that going into the earnings, I mean, look at that volume. That was a monster run up here on the stock into earnings. Then earnings came and the stock, sold on off. Now it's drifted on up. But, this is a great example of a really nice run up into earnings. But there are plenty of examples we can go look at to see the opposite, right? So for me, not having any sort of bias when it comes to the company, not knowing a heck of a whole lot about CRWD, I would look at it with this type of a view. Yes, there could be a run up into earnings. But when we see a run up into earnings, like Beyond Meat, there's a characteristic that we tend to see. And that characteristic is that the stock basically does not break the lows of the prior day. Right? Doesn't break the lows of the prior day during that run-up. So we have CRWD, which, yesterday had a nice gain on it, right? Popped on up, gapped on up here this morning, is selling off, but has not broken yesterday's lows. So if I'm eager, really wanting to play it, I'm going out and I'm saying, all right, I can pick it up here, right? I can use it off of today's lows. But for me personally, I would wait. I would give it some time to play out a little bit here today, hoping it rallies a buck or two, and then basically buy it with a stop on today's low. Right, and that would help to mitigate some of the risk factors, there with it. But I want to be a buyer holding it off of the prior day's low, and we see some of that starting to set on up. But if those prior day lows break, it doesn't mean the stock's going to tank, but it is just the odds are no longer in my favor, and I'm in a position that I'm not too comfortable with overall. So that's how I would look at CrowdStrike and how I would look to play that. The option values on it are not cheap, but they're also not, ridiculous. When it comes to some of the ways some of these IPOs trade, we're talking about 117, 117 implied volatility, which is very, very high. But we have seen upwards into the 200 range. So, you're going to need a big move, but the stock can move, in a big way. You can mitigate some of that implied volatility risk by, either going further into the money or putting on some sort of spread there with it. Okay. So hopefully that answers the question there on CRWD and kind of how I look at those IPOs and how they, how they trade and kind of simplify it in terms that make it a little more tradable without having to really understand all the dynamics of the company as as they sit. Okay, alrighty. I will be back on here this afternoon. This afternoon, we'll take a look at where the market metrics are after today. We'll take a look at how some of these 3-7 crossovers shape up, and if we see them shape up in a bullish fashion, we'll certainly go out and trade them. Maybe in one of those positions that have to go into the sorting methods, and if so, great. We'll go out and we'll do that here this afternoon. But as far as this morning, consolidation risk component just a little too high to be able to go get in right now. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.